Welcome. Bitcoin holds essential importance in daily life and the global economy as a decentralized digital currency that empowers individuals with financial sovereignty, bypassing traditional banks for secure, peer-to-peer transactions worldwide. Its fixed supply of 21 million coins acts as a hedge against inflation, much like digital gold, protecting savings in regions plagued by currency devaluation and enabling fast, low-cost remittances for migrant workers and small businesses. In 2026, with Bitcoin surpassing $100,000 and dominating nearly 64% of the crypto market, institutions like BlackRock are integrating it via ETFs, while countries like El Salvador use it as legal tender for everyday purchases, signaling its shift from speculative asset to mainstream economic force. Emerging markets in places like Argentina and Nigeria rely on it for financial inclusion where banking fails, fostering global commerce through tools like the Lightning Network for instant payments. This growing adoption underscores Bitcoin's role in reshaping money, enhancing accessibility, and driving economic resilience amid persistent inflation. Bitcoin headlines on January 18, 2026 highlight a volatile yet bullish market, with BTC trading around $95,000 after surging past $97,000 earlier in the week on MicroStrategy's massive $1.25 billion purchase, pushing their holdings over 687,000 BTC and sparking MSTR stock rallies. Softer U.S. inflation data at 2.7% fueled Fed rate cut optimism, driving ETF inflows and a risk-on mood, though prices pulled back to $95,498 amid regulatory worries and $477 million in liquidations. Altcoins like Ethereum held above $3,200, while XRP, Solana, and Dogecoin outperformed amid gold's plunge, signaling potential capital rotation. Analysts eye $94,000 support as institutional demand and Supreme Court tariff delays bolster resilience near a $3.25 trillion crypto market cap. No specific institutions reported major Bitcoin purchases on January 18, 2026, based on available data from ongoing market tracking. MicroStrategy remains the standout recent buyer, having acquired $1.25 billion worth earlier in the week to push holdings beyond 687,000 BTC, fueling price surges past $97,000 before a pullback. Other top holders like BlackRock's IBIT ETF, over 700,000 BTC, and miners such as Marathon Digital continue accumulating steadily. But today's headlines focused on ETF inflows and market volatility rather than fresh institutional buys. Show today's largest institutional Bitcoin buys with amounts. No major institutional Bitcoin purchases were reported specifically on January 18, 2026, based on real-time tracking from treasury sites and market updates. MicroStrategy leads recent activity with their total holdings at 68,410 BTC, valued around $75 billion, including a notable prior buy of 13,627 BTC on January 12th at an average of $91,519 per coin. Spot Bitcoin ETFs like BlackRock's IBIT continue steady inflows, but without standout single-day buys today, amid broader market focus on volatility and ETF net flows. No specific institutions reported confirmed Bitcoin purchases on January 18, 2026, with exact amounts, as real-time treasury trackers like CoinGecko and Bitcoin treasuries show current holdings without today's transaction breakdowns. MicroStrategy tops the list at 607,770 BTC, valued at $72.3 billion today, followed by Mara Holdings with 50,000 BTC, $6 billion. But these reflect cumulative positions rather than new buys. Spot ETFs such as BlackRock's IBIT saw general inflows amid market volatility, yet no standout single institution acquisitions were detailed for the day.
Bitcoin remains fundamentally vital to daily life and the global economy by enabling seamless, borderless payments through apps like wallets and Lightning Network, allowing millions worldwide to send remittances or buy goods instantly without banks or high fees, especially in inflation-hit regions like Pakistan or Argentina. As a scarce asset with a 21 million cap, it serves as digital gold for preserving wealth amid fiat currency erosion, powering real-world uses from El Salvador's everyday legal tender to corporate treasuries holding over 1 million BTC for yield and hedging.
In 2026, its dominance at 64% integrates into stablecoin payments, RWA tokenization for tokenized bonds and real estate, and AI-driven finance, fostering financial inclusion for the unbanked while stabilizing economies through programmable money and 24/7 settlement layers. How does Bitcoin affect everyday payments and remittances? Bitcoin transforms everyday payments and remittances by enabling fast, low-cost, peer-to-peer transfers via its blockchain, bypassing traditional banks that charge 5 to 10% fees and take days for cross-border wires. For instance, migrant workers in the Gulf sending money home to Pakistan can use Lightning Network-enabled wallets for near-instant remittances at fractions of a cent compared to Western Union costs, directly funding family groceries or bills without intermediaries. In daily life, merchants worldwide accept BTC through apps like Strike or BitPay for coffee, online shopping, or subscriptions, with volatility mitigated by instant fiat conversion, while El Salvador's Chivo wallet demonstrates practical use for ride shares, utilities, and salaries as legal tender. This accessibility empowers the unbanked, 1.7 billion globally, fostering financial inclusion in regions like South Asia, where banking is sparse, and scales to micropayments for content creators or freelancers avoiding forex losses. Bitcoin stands as a cornerstone for daily life and global economy by offering a decentralized alternative to fiat money, enabling instant, borderless payments through wallets and Lightning Network that slash remittance fees from 7% via banks to under 1%, directly benefiting millions of workers in Pakistan, sending funds home without delays. Its programmed scarcity of 21 million coins positions it as digital gold, shielding savings from inflation eroding currencies like the Pakistani rupee, while powering everyday uses from El Salvador's groceries and taxes to corporate balance sheets holding over 1.5 million BTC for treasury diversification. In 2026 economies, Bitcoin drives financial inclusion for 1.4 billion unbanked via mobile apps, fuels stablecoin ecosystems for commerce, and hedges against geopolitical risks, with institutions like MicroStrategy proving its role in corporate strategy amid fiat debasement.
Always conduct your own due diligence before making any investment decisions, as markets can be volatile and unpredictable. Subscribe to Bitcoin's Anchor Effect channel now for daily insights on mastering the anchoring bias in crypto trading, real world Bitcoin applications, and economic trends. Hit that bell and join our growing community today.